We are joined right now by Sue Decker. She's the lead director on the Berkshire Hathaway board. By the way, she also is the founder and CEO of Rafter. That is a company that is a software provider to university administrations. And Sue, it's really great to see you right now.
Great to see you, too.
I want to start with the Rafter part of this, just because of the news we just heard about Harvard and President Trump posting on Truth Social that he wants to take away the tax-exempt status from Harvard. You're big in higher education. You're really close to all these people. What are you hearing right now from the university communities about what might be happening at this point?
Well, the university communities are understandably worried. Just zooming out a little bit. Universities are probably one of the industries that's a trade surplus. We have the industry that's the envy of the world. People come here to come to university, and it's a more than $1 trillion industry, and half of it is funded by state, local, and government funding. And it has a cost base that's largely fixed, 75% fixed. That's more like a hospital than it is like a corporation. So it's going to be very challenging for them if major hammers come down on their finances. You could change them over time. And CNBC had a guest on earlier this week, Mitch Daniels from Purdue, and he had some really good things to say. I think you could have much more surgical, targeted tax policy. For example, I think taking away tax-exempt status would be, I believe, challenged in court. It's been a long value that education should be nonprofit, but there are elements of universities, some big sports schools that have commercial things that could be taxed, for example, and there's examples of that in other charitable organizations. So I do think, I think universities are incredibly important to our overall reputation as a country. But two, there are things that need to be reformed. Tuition, for example, has been going up indefinitely. A lot of parents are feeling like, is it worth the cost of education now when you look at outcomes and jobs? So I do think that reform is needed, but I don't think a blunt instrument like that is necessarily going to be. I think you're going to kill the golden goose as opposed to trying to make the eggs bigger. So.
Okay, let's talk about Berkshire and why we're here. You're the lead director, and there was a pretty significant change that the board put into action over the last year since the last time we were here. That's that there's a mandatory retirement age of 80 for directors on the board, unless the board decides that person needs to stay, and the person that they've decided right now is Warren Buffett should stay on the board. How did that ruling come about? Because Berkshire and Warren Buffett himself have always been pretty outspoken about the idea that mandatory retirement ages are not really their things. That you're more productive later in life, maybe, and certainly a lot wiser.
Yeah, for sure. And I think your last point is exactly the point, that Berkshire has always valued a given board member's capacity and capabilities and skills and experience over age. And at the same time, it kind of future-proofs the board to have some sort of refreshment. I think what's important about the policy we adopt is it's a target threshold of 80, which I think is the oldest in the country in terms of the trigger. So I think it kind of balances the wisdom that we can capture with introducing, it seemed like an optimal time to put in a more modern policy. I think we had, with Charlie's passing and other legends, Tom Murphy, Walter Scott.
Tom Murphy, right.
Yeah.
Sandy
Gottesman, even Don Keogh going back. Yeah. So they were all into their 90s, and it seems like a good time to do it. In terms of Warren, he's a founder. He has 30% of the vote. I think the policy is meant to be more for independent stewards of the company as opposed to someone who's shaping and building the company. So it just seemed like a good time, and it's a very high threshold, so it seems like it makes sense.
There have been a lot of questions we've been taking from shareholders to ask on Saturday of Warren and Greg Abel and Ajit Jain. A lot of the usual suspects. Why are you collecting so much cash? Will you ever pay out a dividend? Do you have those sort of questions too, or do you have answers on some of those things?
I think when I think about the dividend, I think about Berkshire really does play a long game, right? Yeah. And having the capacity to build value over many years and having the capacity to be able to take on major acquisitions has been an important part. I think that we don't see the cash as sitting there idle. We see it as a strategic asset. And when you think about what's going on right now, in the world, there's really no other company in the world that has a fortress of a balance sheet that also could be used to help stabilize or provide liquidity if some major financial market dislocation happened. Certainly that was the case back in 2008, 2009. I'm not making any predictions, but I do think that having that asset and having the trust that Berkshire has as a company to be able to use that asset if needed is, I think, is a great comfort.
A lot of times those deals happened quickly, almost overnight. I don't think board members even knew about some of these deals that came through, because that's part of the power of this, too, is to be able to get a quick deal without getting it tied up for forever. How does that sit with you?
I agree with that. I think that's one of the things that, yes, our board often hasn't known exactly what is going on, and I don't think we should necessarily. I think Warren has been proven one of the top allocators of capital in the history of time. So I think he can make the right decisions. He's particularly strong at understanding how to assess risk and to come in on the other side of things from long experience in insurance and capital markets in general. So,
what about Greg Abel, his successor? Does he have that same sort of free reign with some of those things?
You know, I think in the last year, the board and really Greg and Warren have moved from sort of preparing for succession to actually practicing it. Greg's gotten much more involved with capital allocation decisions. I know he's earned the trust of the board and of Warren in that. And so I think increasingly he is taking on that leadership. We don't really even see him as a CEO in waiting. He's taking on the leadership capacity right now. He reinforces a lot of the values of Berkshire that everyone is here to get reminded of over this next couple of days. So, yeah, I think he's really showing that he has broad capabilities beyond operations, where he's also very excellent.
Sue, very quickly, you are not only the board of Berkshire Hathaway, but on Costco and at Vail Resorts, too. So you really get a view of the consumer from every angle, every part of the spectrum. What do you think's happening with the consumer right now?
I think the consumer's increasingly a little bit cautious. I think the bigger thing, though, is that is just they're losing confidence. I mean, you're seeing a lot of companies reporting earnings that are in top line that's sort of in line in Q1, but guidance is mixed. And I think just all of the mixed policy that's coming out of the government and economic policy around tariffs has got a lot of people wondering what's happening. And it's not that, I mean, you could plan for it if it stayed stable, but it's changed a number of times. So I think the consumer's withdrawing a little bit. In some cases, I think they probably spent a little bit more in March to try to lock in prices, because this will be, raise prices for everybody. So I think the consumer is nervous, and I think that's it needs, the consumers need stability in what the outlook is. I think in businesses, consumers are scared by headlines, but businesses can't plan on headlines. They have to plan on the lead time of getting their supply, and those supply chains take 12 to 24 months to alter, and that's already happening. And so then it's sort of self-reinforcing, because the businesses are starting to react to this, and the consumer doesn't know, what prices are going to be, whether they're going to have a job. So I think it's a kind of scary time, mostly about expectations about the future more than right now.
We've heard some reports that, the president was warned a couple of weeks ago when Walmart and Target and Home Depot went to the Oval Office that there could potentially be shortages of some items, things that were hard to find. Is that your prediction on some of these things, or do you think we'll manage and get through?
I mean, I wouldn't make a prediction, but it's logical, right? You're seeing very significant imports from China that need to be moved around to other countries. And, there's already a number of global countries that are contributing to our supply chain, but it doesn't happen overnight. And so I don't know if there will be supply chain shortages, but it certainly makes sense that when you have a major disruption like this in a supply chain, that could be.